Hello, everyone. And I see you are really tired at this moment, so I'm going to run through this presentation very quickly, just like Forrest Gump, but I'm going to try to explain as much as possible about future investment. I'm going to be talking about personal investment, which is basically a part of fintech, but why a very important part? If you think about personal investment and Robo Advisory, at this moment, it is number 3 reason to use fintech declared by the clients. But if you think about potential, according to Roland Berger's study, investing and asset management is number 1. So if you are looking for a market which has a great perspective, you should definitely think about robo-advisory in future. And the global macro is absolutely opportunity at this moment. We are living in a world of extremely low interest rate, and it's not only the case of Japan or European Union, it is all across the world. At the same time, we have global wealth growing, especially in emerging countries like Asia, Eastern Europe, but also the old economies like European Union is growing in wealth. And if you combine those two things, so growing wealth with extremely low interest rate, then you have the window of opportunity for investment products. But if you see the big picture, it is not very colorful at this moment. So if we think about distributing products, investment products through the internet, there is still the way to go. So if you consider American market of mutual funds, you will see that only 14% comes from direct channels. Direct channels are growing, but the path from traditional sales to pure direct distribution goes through mixed channels, and the momentum for the pure digital distribution is still not there. So what is discouraging people from investing through the internet, from investing in general? I call it the Great Mismatch, because investment companies, they tend to use the strategy which I call more is better or more for less. They want the clients to use more functions, more tools, more charts, and bigger choice of instruments. And at the same time, we have this average retail client who has lack of free time, lack of specialized knowledge, and suffers the information noise. So if I am really the retail client and I want to invest my money, so I have a saving account, I have money, I want to invest, is this really working for me? Sorry, XTB guys, I am your client at this moment, but if I am a regular client, it is not working for me. And here comes Robo Advisory, because people don't understand hundreds of financial instruments. They don't understand technical charts, blinking numbers, bid and ask quotations, and they tend to use mobile technology to contact with banks and financial institutions. And there is this huge wave of robo-advisory going through the industry. Of course, we know Wealthfront, we know Betterment, but there's a lot of more financial startups, the robo-advisory startups, going through the industry. It is the number above 50 globally at this moment. And adoption, guess what, is already there. So if you think about adoption index, we are not talking about early adopters, we are not talking about early majority, it is late majority in most cases. And the forecast for robo-advisory is sky high. So if you consider only American market, till 2020, it is expected to be invested $2.2 trillion. At this moment, it is 0.5. What are fintechs doing? They are trying to convert the process of investment from very complicated to what I call fintech paradigm, which is very simple. Ask, propose, and execute. So tell me who you are. I will give you a very simple idea to invest, and then I will automatize the execution. We don't have time for many cases, but Wealthify can be one of them. So this is point 1, ask. Point 2, propose. And point 3, execute. Very simple. At this moment, Fintechs, I think they are concentrating on giving better user experience and simplifying the process. But in future, probably the field of competition will move also towards pricing models and advisory models. At this particular moment, if you think about Robo Advisory, there is no AI in it. Believe me, in most cases, robo-advisors are using mostly the modern portfolio theory of Markowitz, but it will change in future. So if you think about future fields of competition, it will be in advisory models. So what can banks do about fintechs? First of all, I tell bankers, don't sleep. Because, okay, I agree, fintechs won't kill banks. But if you are a bank manager, you are not getting paid for keeping your bank alive. You are getting paid for expanding your business, bringing new clients, bringing new products, new ideas, and expanding the whole business. So if you want to do this, you cannot ignore the wave of fintechs. And you can basically do three things: do it yourself, acquire, or buy technology. Each of those three things have its own advantages and disadvantages. You can do it yourself, but you have to remember that time to market is very essential. So if you have know-how and capabilities, and maybe if you are struggling with regulatory things, you can think about acquiring. But if you acquire, you buy the whole company. So you buy also the people, the culture, and you are not sure if this will fit your company culture. At the same time, you have this independency trap. So fintech wants to be independent, but if you take fintech into your corporation, it won't be so independent in the future. And there is the third way, and the third way is buying the technology. So if there is available technology, you don't waste time. You keep your time to market. You have all decisions in your hand, and you buy only this, what you want to buy. So going back to my question, can fintechs change the distribution of investment products? It has already started. The momentum is up, but there is still a long way to go. You cannot ignore it because you will lose your opportunity for new clients and new business. Time to market is absolutely essential. And fintech startups are looking for funding and for cooperation, but you have to think and remember about this culture thing and the independency trap. And you should definitely, as a bank, consider buying just the technology instead of buying the company. We at Ailleron can help with our newly released Robo Wealth application, which is dedicated for banks to deal with affluent and mass affluent customers. I encourage you to visit robowealth24.com. You can also ask there for a live presentation of the system. Thank you for your time.